Hi everyone, we are live from the School Tech Summit on 27 June 2020. So the overall theme of the School Tech Summit is that we are getting all the school education stakeholders on the one platform to share their approaches, opportunities and challenges, what they are doing in the COVID situation and what they are planning for the post-COVID. Right now we have one of leading company Financepeer. We have Mr. Rohit, founder and CEO, who is handling all the finance related for the education, schools, and other stakeholders. So, Rohit, most welcome for the School Tech Summit.
Thank you.
And Rohit, we want to hear first your overall solutions that you are providing to the school stakeholders and how you are helping them and how you are supporting them and what the finance peer effect to the school systems. Then we come to the audience questions. Then we can share some opportunities for the schools through finance peer. So Rohit is over to you. Thanks.
Oh, welcome, Rohit.
Hi,
Thanks for
Ravi.
joining us. Hi.
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 Yeah.
Thanks a lot. So thanks a lot, Ravi and Abhishek, for having us here. Firstly, it's an honor to be a part of Elets always. So I think a lot of people will be focusing on a tech portion of the solutions offered to schools in today's sessions. What I would start with is not just the tech, some more solutions that the school may leverage along
Yes.
with the tech. So
Yes,
is
sir.
it possible that I share my screen?
Vakar, can you help me out?
I think it's there. Yes. Abhishek, can you just let me know if the screen is visible?
Yes, we can visible. You can just explain. Yes, sir.
Yeah. So what I'm going to talk today is mostly what schools can do this year, because right now the problem is the need of the hour, right? A lot of problems do exist. Now, just to start with, there are a lot of catch-22 situations that the school is into today. Not only the schools, even the other education institutions, right? Firstly, we have interacted with more than around 1,800 institutions so far in the country that we are already working with, and we have identified the three key issues that they have. There are a lot more other than this as well, like upskilling of different teachers and students as well. But the three key was, firstly, everyone is expecting that they do not reduce the staff salaries, or they pay them on time, or they don't remove the staff, they try to support them. Now, doing that for a 1 or 2 months is a different ball game, but doing it for such a long time is very difficult. Because on one end you are expecting this, on the other end you have no fee collections happening. That means there's no revenue being generated for the schools, right? And that support structure from the government is also very limited in this front. Second largest issue that we have also seen is there is a need of the digital solutions needed by these schools, right? And we are also providing a few. But what is another problem with this is that schools today, a lot of them say Zoom, they're using Zoom or Microsoft Teams or Google, that's fine. But these are all solutions where they do not incur much of the cost. But the real solutions, the real learning management systems are existing, and that you will hear about in today's session. So what happens with this is there is an upfront capital cost. Parents today are not willing to pay that additional cost, right? And parents, the fee payment of the parents in most cases, nearly 60-70% of the fees the schools have not received. So how is it that they're going to pay for this and still not receive the revenue? So this is still an upfront capital cost for them, even though they have to adapt to different learning solutions. So schools are struggling with this factor. They want good learning solutions with more features, but then cost is an issue. And then they're compromising on the quality and trying to say that give us something that does not cost us more. Because obviously we can understand they have capital issues, right? Another thing, again, we have said is whenever the schools reopen in a staggered format or a blended learning format, there has to be a sanitization structure established, especially for this year until the vaccines are out, right? And currently, the infrastructure is not so well equipped in terms of sanitization, in terms of distancing parameters, teachers have to work extras, and even in terms of sanitization, doing it on a regular basis, there's huge cash burn. Again, the cash burn is there before the revenue comes in. So all these factors, what you're looking at is these capital costs that the institutions are incurring. They are incurring it today when they're getting no fees, and they're expected to support the entire schooling staff system as well as the student community. That becomes a very tough situation that they are today, right? That is why I call it a catch-22. A probable solution that we have discussed with different institutions and what they were looking out for, especially in this phase, is first they were looking out for someone who could bridge that fee gap so that the schools still don't forcefully ask the parents to pay, but someone pays on behalf of parents to them, and parents start paying post lockdown, which is the current understanding that parents have. It's not that they don't want to pay the fees, they just need some time, right? And they want that liquidity issue to go up. So some parents, schools are demanding that someone bridges this gap. Another thing, schools are demanding that the similar solution exists also for digital learning solutions. There are a lot of learning solutions, but they want to pay to them post receiving the fees. They don't want to pay to them today. Now, that post receiving the fees does not mean it's 1 month, 2 months, 3 months. It may also be post 6 months or post 8 months or 12 months, right? So they also want to delay those capital costs for the learning solution, but at the same time provide the learning solutions to parents so that parents can identify, students can identify the value add there. So that's one more bridging that they're looking out for. And of course, the third one is again, they want the cost of infrastructure, etc., to be again post receiving revenue. So they want all the infrastructure cost or the capital cost to be postponed to after a few months, and so that they can also provide the services today. So what we have come up, so it's not just Financepeer solutions. So we have paired up with a lot of financial institutions across the country, across the globe, to be able to come up with such solutions. There are impact funds that we work with. There are banks that we work with, nationalized banks. There are other larger NBFCs that we work with, including our own. So there are different ways that we are working with them, different financial solutions that we're trying to form. And this is what we have come up with. We also have our own NGO arm in this. So what we do is the first bridging that the schools needed, that we parents, on behalf of parents, someone pays to the school today, right? And parents start paying post the lockdown whenever the schools start, which could be 3 months or 6 months, right? This is what we have done today. So we are paying fees to the institutions on behalf of the parents today, and we're collecting it from the parents post the lockdown, right? So that's one of the major services that we are offering today. So this gives that capital flow. Second, even in terms of the content solutions, we are doing that today, right? So even if the schools are adopting the content solutions, they're not able to pay to the content providers. Some of the content providers are able to give it on a trial basis for 1 or 2 months, but we end up paying to the content providers upfront, and we collect it from the schools post lockdown. So that also gives them that capital leverage, right? And this is done for the end customer, which in the case of parents or students, it's a zero interest, zero cost EMI. What does that do? It basically gives a reputation to the school. It builds upon their reputation that they have brought another financial solution for their parents, so that they don't bear any additional cost for paying in a monthly EMI fashion. Right? So here the parent ends up paying in zero cost, zero interest EMIs, and the school is still getting the money from us today. There's a win-win situation that we can achieve, and parents can appreciate that. Right? So the entire idea here is to give a monthly installment option to parents, but at the same time provide the entire fees that the school might need, even for its content or for its tuition admissions or its infrastructure cost, and that is paid by us to them today, which gives them the power to really look for more features, look for more value additions to the end customers. Right? And we're doing this without taking any security or collaterals from the schools. On top of it, we provide insurance coverage to the students. We cover all kinds of payments, not restricted to only tuition segment. Right? And what we have seen here is the dropout. There's a reduction in dropout. It's increasing the school's reputation. And as soon as we enable the school to provide those learning solutions to the parent starts appreciating this, and their fee payment cycle also begins. So we have seen it across the 1500 schools, right? Wherever there's a value addition, the parents don't hesitate to start their payment. But today, schools are only sticking to Zoom classes, and there is a hesitation with the parents that just because of Zoom, because parents have to sit with students, it's difficult to provide for and pay the fees as well. So we have our own digital solutions where we have created a collaboration world, kind of a Netflix for education that we've created, and we have most of the content platforms also that we have integrated here. So what we do is we do a mass or a bulk purchase from all of them, because we have a very large distribution today in terms of number of students, number of schools that we are paired up with. And we offer this as a solution to the schools where we don't take money from the schools, right? So it's a cash flow maintained for the content providers. It's a cash flow maintained for the schools as well. So just to give you a glimpse of it, some of the larger schools, be it Indus Scottish, some of it as a DAV, Corvus, Mercury International, DPS, some schools. So there are a lot of schools that we're working with, all kids inclusive. Right? And we have started to provide such facilities. It's live in more than 40 cities already. So that's a brief that I wanted to give to everyone. And I leave that with the slides. If you want to get in touch with our team, you can talk to them and see how we can best customize a solution for your schools and see how we can enable the entire education. And we are open to customization. So it's a very fast-paced company which adopts to your needs. One last thought I want to leave everyone with is Financepeer is not only on the financing portion, it's more on the support structure. And on the content provision, I think it's a blended learning. It's a time for blended learning. It's accepted that it will go on not only for this year, but for the coming year as well. And with this, we also have to focus not only on upskilling the students in terms of online learning, but upskilling the staff as well, right? Because a lot of the staffs are not very used to having so many apps in terms of their usage, and LMS systems are not very intuitive for the staff which have never been using digital systems to teach. So upskilling of the staff is also a very good factor and something that we have to look at. So that's the last thought that I would like to leave at. So that's it. And if you have anyone has any questions, I'm happy to take them. So there are two questions, right? Should I just answer them, Abhishek?
Yes,
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 yes, yes.
yes, yes, yes.
So first question is by Manish. Can an individual also avail your service in terms of education fee financing? Yes, individuals can also take it. So we have started it separately without institution partnership given the current phase. So yes, we do service them. Second question, do you work for engineering colleges? Yes, we do. We work for K-12. We work for preschools up to 12. Then even after that, we work for colleges, UG, PG. We also work for skill development courses, tuition classes, everything and everything related to education. So yes, we do work for engineering colleges.
Sure. And I think one question I want to ask Rohit that
Yeah.
I think many schools are confused. Have this question that what is your business model in this? Because this looks too good to be true.
Correct.
Rohit. Yeah.
Yes, yes, I'll explain. Right. So, see, there
Yeah.
has to be a win-win situation. We have to have an understanding. There has to be a win-win situation for the school,
Hmm.
not only for the school, but also for the parents and also for us, right? When we come in as a lending partner or a fee solution partner, right? So, it has to be a sustainable model as well. So, there is a discounting that we have from the schools, right? And discounting provides for us to have a sustainable fund. Now, the discounting is not in terms of what the bank rates are. It's way lower compared to a normalized bank rates, right? But that discounting doesn't really matter much because what we have seen is even if we have a discounting of say 7 or 8% or sometimes 3 or 4%, depending on the volume of the schools, effectively what we have seen across the year is there's an organic increase in admissions, right? Which we have seen is 15 to 22%. Plus, there's return on investment. You're getting your entire fees at least 9 to 10 months in advance. So that's a benefit, and there's no security. So if you want to build and expand your infrastructure, you end up paying a lot of interest on borrowing funds. Right? And you're getting this chunk upfront. You can build on top of that. And plus, this year, what we have seen is we have expected, we have interacted with everyone, and what we are seeing is at least around 8 to 15% of the parents in every set of school we're expecting that these fees will not be received by the school this year. This could be postponed to next year, right? Because these parents are facing genuine issues. So even though you start everything, you can't expect that you will get 100% of your fee collection by the end of the year. There would be a set of parents who have lost jobs, who have suffered from their business, right? And this is where we also give a plug-in. So that 8 to 15% which you're going to lose, we are paying on their behalf. And plus we have a trust arm as well. So wherever there's a need-based scholarships required for such cases, we come and sponsor them. So effectively, net, there is no loss for the school if you really look at the larger picture. And it's a sustainable model for all the ecosystem players together.
Sure. I think there is another question on the chat, and someone is asking that what is the kind of interest charged on the EMI?
For the when we work with institutions, right, we take discount from institutions and from the parents as such or students, there is no interest charged. So for them, it's a very simple mechanism that get rewarded for paying your fees. How does that happen? Whenever they pay their fees, they're not paying a single rupee extra, but we give them cashback and reward points. These reward points and cashback they can use to purchase any of the online products that we're talking about today, right? So they can directly use, it's a convertible, it's actual cash. They get that. Plus they get an insurance. So wherein anything happens to the earning parent in terms of job loss, accidental death, then we sponsor the kid not only for that year, but for all the remaining years. Right? So this kind of facility is given to them at no additional cost. Whatever the fees are, the fees remain as is. So there is no cost or burden on the parent as such.
So there is another question that asking that is there any limitation of the amount, minimum and maximum?
No. So we don't have any limitations on the amount, right? Typically, we try to do fee amount which is at least a 10,000, but because of COVID, we have not come down to any limitations. So whatever the fee amount are, it could be 5,000, 10,000, it could be 20 lakhs, 25 lakhs as well, right? In terms of fee size. So there's no restriction as such. We just have to have pairing with the institutions, and we deposit fund only in the institution's account on behalf of the student or parents.
Another question is that is this facility only available in selected cities or it is all over India?
It's all over India. So right now also we're live in 47 cities, right? But we have no pin code restriction, no region restrictions. It's available across the country, tier 1, tier 2, tier 3 cities everywhere.
Sure. So Mr. Gagan Arora is asking that can you share the proposal which we can share with students?
Yes, I can. So if I can get the contact details, if you, Abhishek, can help us with relevant contact details, I will ask the team, they'll directly reach out to you, share the proposal, have a word with you. You can have a discussion on the customized solution for your institution, and then we can go ahead with the launch.
Excellent. So I think with this we can end this presentation, and thank you, Rohit. I think your solution is in a way a lifeline for several institutions because of this COVID situations. Many schools are facing dire problems in the funding of salaries, funding of all that online learning they are providing. So I think I will request all the attendees who are watching that if you find this interesting, please contact us or Rohit, and we will help you understand this solution better.
Sure.
Rohit,
Thanks a lot, Ravi and Abhishek. So one last thing, Ravi and Abhishek, is even when the content providers come into picture and when they have their sessions, so please pass on one message that because we have seen in terms of content solutions given to schools, they are facing financial issues. So the content solutions could be a lot more innovative, but it doesn't mean that it's easier for the institution to adopt. So wherever such content providers are facing issues with respect to the payment, they can of course get in touch with us and we can enable those payments in the schools, right? So that the schools don't get the pinch or feel the pinch of it. Right? So of course we will also help the content providers in such cases.
Sure, we will do that 100%.
Excellent, okay. Rohit. With this, we will close this session.
Sure.
Thank you so much.
Thanks a lot. Yeah. Thank you. Thanks a lot, everyone.
Pleasure. Yeah, Abhishek.